Well, happy Monday, Lisa.
Happy Monday, Caitlin. How are you this now moment on Monday?
I am enjoying our 45-degree, almost 50-degree weather.
Beautiful,
Yeah, I'm
beautiful.
loving it. The spring is in the air, and then I hear it might snow tonight. So go team.
Yeah, let's roll with that. I'm Lisa Regan, a lighthouse lady.
And I am Caitlin Graves, your other lighthouse lady, and we are today bringing you Money Chat.
Yeah, so we decided every Monday, right around 2:15 Mountain Time, to go live and share with you our insights so we can provide information, educate those that want to know more about what's happening in the world of money. It's all about circulation, and we like to do our best to keep it short and sweet. Our resource for Money Chats is from a company that provides email. It's called Market Briefs. They are super fun and they are super informative, and it's short and sweet. So I'm going to share perhaps. Well, this is curious.
Yeah, so we are going to share the market briefs with you guys, and the Money Chats was inspired to talk all things money, jargon, information, current economic standings, but also the feelings, then the personal experience Lisa and I have had, on our own personal money journeys as we have grown in understanding and awareness. Being wealth coaches has led us into a dynamic full of information. So we're constantly expanding and experiencing.
Right. So as we're looking at the screen, this came from Sunday's email, and they have 3 corny jokes. The number 1 corny joke: I once owned a paper business, but it folded. Har har. Caitlin, read number 2.
Why did the can crusher quit his job? Because it was so depressing. Oh, that's kind of funny.
Number 3, I really wanted my bakery business to be a success. I just wasn't making enough dough.
Oh, wow. That one's bad. Oh, funny bad.
So this past week has really been focused on banks worldwide, not just here in the US. So the wacky world of Wall Street with banks. So Friday, March 10th, the Silicon Valley Bank collapsed. The regulators froze their assets, and then what happened? All kinds of banks are having problems. First Republic Bank, Western Alliance Bank, these banks are publicly traded. Comerica Bank, Customers Bank Corp, PacWest Bank Corp, Bank of America. Out of all of those, I really recognize Bank of America. And the feds that control the money, Janet Yellen is Secretary of the Feds. They rolled out emergency measures to prevent a banking crisis so that investors could take a sigh of relief, but depositors could actually breathe easier. There's one thing about investing, but when you put your money in a bank with the FDIC potentially insuring your holdings at the bank, they wanted to ensure, especially though depositors at Silicon Valley Bank had full access to their money.
Right.
So, yeah, long and short is the week, as last week went on and we entered into Friday, First Republic Bank and Credit Suisse Bank, they found issues with. And First Republic dropped on Friday despite getting help from its banking friends. 11 other banks agreed to deposit $30 billion into First Republic to avoid another liquidity crisis, meaning they don't have enough cash on hand to cover all the withdrawals out of the accounts. Then Credit Suisse is also undergoing a massive strategic overhaul aimed at restoring stability and profitability. Those are highlights. I'm not going to go all into Credit Suisse. We'll put a link for market briefs if you're inclined. We have our own special identifier. There's no money involved in linking us up. It's all just about networking, and we get credit. Like they have giveaways once a week or something. That's the extent of it.
Yeah, not affiliated, right? Yeah.
Right.
But their information is wonderful.
Reddit, here's this beautiful infographic on bank failure timeline since 2001, and it has adjusted for inflation. So back in 2008, Washington Mutual Bank tanked and it failed. And now we're into Silicon Valley Bank and Signature Bank. And the sources here are reliable people. So like we shared with you last week, do your own due diligence, check the facts. We want people to take whatever it is that really interests them, they want to know more about, and check it for themselves.
Right. The source on this is the FDIC.gov. So, I mean.
Yeah. And that way you can even find out if your bank, where you have your deposits made, if there's FDIC insurance.
Up to the $250,000, right? That's
right, per account holder per bank. So you can have 10 accounts or you can have one account. It's up to 250,000 per account holder at one institution.
Mm-hmm.
So market briefs, they find people to sponsor their material, and so every time you read one, there's a company that they're featuring.
Yes.
Okay, so back to more on banks. Last but not least, before they move into the other topics, Treasury Secretary Janet Yellen has some interesting things to say about future bank failures. So note to self. Yellen told senators that government refunds of uninsured deposits will not be extended to every bank that fails. Keynote, people.
Wow.
Only those that pose systemic risk to the financial system. And she went on to say, our banking system remains sound and Americans can feel confident their deposits will be there when they need them. And that's the bottom line. Can I still access my money on a Saturday or a Sunday and I use my ATM card to take a withdrawal? That's the bottom line. It's like the bank is holding on your behalf money so that you can circulate it. That's it. So we're keeping it real simple. Do your due diligence. Call your bank if you're concerned.
Mm-hmm. I think that's the first action step, is right. So really focusing on what's in your control, which generally is not the state of the economy. What's in your control is to call your bank and see if the FDIC does insure your bank. And then if it doesn't, you can say, well, I would like to take my money out and find a bank that does. Or, so then you go back to your next options to feel like your money is where it needs to be, to feel like that you're very comfortable with your money being there. That's where Lisa and I come from, in the state of, I know a lot of people are having a ton of fear right now about this and a ton of anxiety. And really, I can understand that so well, because we just went through COVID and the fear and anxiety has, just paramountly spread. And there's so much happening and so much change so quickly that it really does come down to you doing your own due diligence and keeping your controllables in your control. That's the level. So if you don't feel happy or safe with where you have your money, it is simple to move it, right? And then understanding how much you can pull out of your bank in one day. So getting these fine print details so you know how you can go about it. That's in your control. But staying in a fear zone when all you need to do is take control of your own personal money is really detrimental to your wealth and your health. So
Yes.
just take those proactive steps and then get out of the fear zone, because
Right.
living in there is not going to create any kind of health and wealth for yourself. It's
So
not.
we're focusing light on, hey, money is meant to be circulated, and there's places you can hold your money and you can feel confident, you can feel empowered, you can feel joy and love and gratitude rather than all the fear things. So in my heart of hearts, and sharing out loud, we have accounts with commercial banks, and we also have accounts with credit unions. They are structured differently, and they do have insurance through, it's called CUNA, C-U-N-A. And we can drop something in the chat, but basically it's their version of the FDIC. So
Okay.
all the credit unions participate in risk management to cover depositors, so that should something happen to the credit union, you can still get access to your money.
Right. Well,
And
that's very interesting, because now, so this is theoretical. I'm just curious. So the bank obviously shut down. They seized assets, I'm assuming. So there's nobody working then at the bank to then put, you're just using an ATM. I'm just curious of controllables, then the process for the people that had to deal with Silicon Valley Bank of getting their money. If they're like, is the bank completely shut? Nobody's working there. You're just ATMing it, or you're online withdrawing. Like, how does that work? I'm curious. Now I'm
yeah,
questioning.
well, and we haven't done that deep dive. I do know that the deposits were fully covered, everybody's deposit. The US Treasury went in and made sure whoever had money there that was trying to get it out. And then, of course, the state regulators of California seized all the assets. So maybe California government put people in. I really don't, so this is in shedding light, asking questions, admitting what I don't know.
Mhm.
But this is where you take your power back and you preventatively, there's been a huge amount of focus on preventative health. Well, let's do some preventative wealth. Ring, 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 hey, bank, what's the deal here? How are things playing out? And, where you have your funds. A lot of times, where we live, it's very regional, the banks that we have. Some are even local.
Right.
And having these huge banks like Bank of America and Credit Suisse and all those other ones, we don't have them in Montana necessarily. So with all that, we'll do some more sharing in the Facebook group for resources, but let us know if you have questions. Drop them in the chat or message us. We love doing this, and we want to ensure that we're bringing value to people because it's fun. It's fun for us.
Right. So in creating, basically you have Lisa and just being really involved in the finance industry for 30 years and finding really credible sources to pull the information from. The reason that we do the money chats is to just have really real conversations about money, the fear, the tactics, what you would have for strategy as preventative wealth measures. And we want to know from anybody listening how we can help and how we can be of most support. And we're going to do like a jargon word. That's Lisa and I were just discussing that, because in the last one, we really talked about kind of the jargon and how so many of us are uninformed on the terms. So we talked about what the FDIC was, right? What did these abbreviations stand for? So I'm just bringing that to you guys. If there's any words you hear thrown around that you're like, man, I've heard it, but I still don't know what it means. Also drop that in the chat, because we just want to share information and we want it to be as helpful as possible and share what we know, right? And then like Lisa said, admit when we don't know. It's okay. It's okay not to know, and we can learn together. So we're so appreciative. Thank you guys so much. We hope you enjoyed Money Chats. Like we said, leave any comment, topic you would like to discuss. Message us, whatever feels good to your heart, because we are just here to be of support to y'all.
That's right. And so have a marvelous Money Monday. Why not? And we'll be back next Monday.
Awesome. Thanks, guys.
Bye.
Bye.